Hey, I'm sorry, missed you there.
I was saying we've got Goldman this morning saying that taking a 25 basis point hike next week off the table from the Fed, given everything we've seen play out in the banking system in recent days. Do you see it the same way?
Yeah, I think so. I mean, I think the only way that would change is if tomorrow you just get a really, really hot CPI print there. But just everything that's going on in markets right now, it just seems to us that the best course of action for the Fed right now is just to pause, to wait and see how things go. And if things start to settle down in financial markets in the next few weeks, you can always start back up again in May. But, given all the uncertainty right now, we just think that, going ahead and raising rates next week just doesn't seem to be the way to go.
And you think the Fed is willing to, I mean, the kind of risk on rally that might happen if that occurs, does that start to cause more risk that actually throws the Fed off of the path that they were on?
Potentially, but I just would think everything that's happening in markets right now, I would expect to see over the next few weeks, you're going to see a lot of banks raising their lending standards or tightening their lending standards. Maybe corporate bond issuance starts to come back a little bit. But as I said before, you could always go back into, come May, you can always go back into tightening mode if you need to. And if everything is back to, quote, normal in mid-April, the Fed can always start to jawbone the market as well, about saying, we need to continue to raise rates here and everything. So it just seems like the more cautious point of view at this point would be to wait.
It's incredible. It hasn't even been a week since Jay Powell testified to the Senate on the Hill last Tuesday and said this.
We've taken forceful actions to tighten the stance of monetary policy. We have covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do.
Are we starting to see the tightening effects be felt? And if so, is this just round one in what could be a cascade of other issues and other risks that are coming to the surface now? And just as in light of that, does it pull forward the possibility of recession?
Our view is I think it does pull forward the possibility of recession. I mean, we've been in the recession camp now for a number of months, and I think given the tightening that we're seeing in financial markets right now, I think it does pull forward a recession. And to paraphrase Warren Buffett, it's when the tide goes out, that's when you find out who's been swimming naked. And we have one here, or at least two banks right now, and there's probably clearly other sorts of institutions, whether they're actual banks or not, but lending institutions that could be in some issues as well. And that's what you end up getting with a very high interest rate sort of environment.
So quickly, very quickly, we get CPI reading tomorrow, but is this entire event disinflationary?
It is disinflationary, this event right now. We won't see it tomorrow, right? But as we go forward, if it slows down the economy, it's disinflationary.
Okay. Jay, thank you for joining us. We'll be keeping an eye on that.